All right, guys, welcome back to the channel. And if you're new here, thanks for stopping by. Make sure you hit that subscribe button now as each of these videos builds upon the previous day's analysis. Today, we're looking at the 12-year pattern in commodities, which has shown some leading indicators for BTC. Now, you might have roughly 1 month, sometimes just a few weeks. In some of the longer cases, the data shows that it takes roughly about 3 months from this signal. Now, the clock is ticking just like it is right now, so make sure you hit that like button. You're at your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, BTC is where it's at, 10% down over the last 4.5 days. The S&P 500 also down from the high over the last 4 trading days, 1.8%. This is that October volatility that we covered at the beginning of the month, just having a warning leading into the election. So I think all of this is playing out as per the plan, or basically as per the data. Sounds a little better. Let's start with the fear and greed index now that Bitcoin's down that 10%. The fear at 37, yesterday 42, and last week was neutral. This is what I like to see in the market so that you can get the market sentiment refreshing, resetting, and just taking a step back from the greed that it builds up quite quickly and has done for this entire bull market going back to November 2022. There was a point where basically this bull market was the least feared of any of the bull markets using the crypto fear and greed index data. What I mean by that is the low on the fear reading was in June of 2022. The BTC low was November, so you get another reading here with slightly higher low. And since that point, all the way up to the March top, there really wasn't any extreme fear in the market. There was the odd day or two where the reading came down into fear, but we hadn't seen any extreme fear until we got to roughly July, August of this year. So it's a good thing that we've reset that market sentiment. The macro cycles are up. The S&P 500 is up, which is another big leading indicator for BTC. And of course, we still have enough bears out there, enough people pessimistic about the markets that are expecting them to come down. Basically, they're thinking that the tops are in or very close to being in. And that is definitely not the view of myself and the analysis that I've been sharing with you over the last several years. I think there's still more upside to go in real estate that we're seeing come through in the data for the US, the UK, Australia. The same thing for the stock markets, the US, Australia, new all-time highs. The UK getting close to it, Canada, all the big countries around the world, the big economies are hitting new all-time highs. China has also been skyrocketing after they began printing money. And there's plenty of reasons to say why. I just want to focus on the data and the charts in today's video. Nice, quick update for you guys. So that's a look at the background here. It seems like a good thing that the market sentiment is resetting. To the downside in the price, BTC is getting very close to our 50% level, 59,500. All that means is that it is a potentially good area for the market to find support. It is really only a few bucks away from that right now. If you look at it in terms of percentage, 0.75%, less than $500 away, or yeah, 430 bucks away from hitting that level to the exact point, which is absolutely okay. It might get there, it might dip a little lower. What I expect to see over the coming weeks is either this being the low, or we rally here to come back up to the previous support levels. You can see right here at $62,000, so just on those lows, and then potentially see how that responds from there. If we get rejected, then yes, we'll probably come back, test this low, test the 50%, maybe even come back to test some of the areas through 57, 58K. But that is days or a few weeks away for October. I'm just preparing myself for either scenario. That's it. The rejection or the breakthrough and consolidation above $62,500 is going to be the first step for the bulls to avoid any sort of further downside. The major levels of support are still 49,000 and 52,000. So we're beginning to see higher lows and higher highs, even though it's been a false break so far of $65,000. I think we're going to see further consolidation here with more upside throughout Q4, and I've got that data to go through with you in just a sec. But let's just recap the stock markets. S&P 500 basically on a bit of a decline here from that peak. We've seen more Middle East conflicts breaking out, and the market not necessarily responding too bad here. Obviously, it was a day down. There's been a reversal, and in the after hours trading, it's dropping a little, but nothing really too extreme in terms of the price action. The areas to worry about are this low here. This is on the 6th of September, and the August low. That's at 5,100 points. So 5,100 and 5,400. If you start to see the market, S&P 500 break down from these levels, then we could be in for a longer breakdown, consolidation, maybe even the end of the market. But until then, I think we're just building a cause and a base for another move higher. It can take a few weeks, as we've looked at with this particular data here, so I won't go too far into it. Essentially, just looking at the movement of the market over October. You can see the dates here at the bottom, and this is just a summation of the last 70 odd years, and in election years as well, which is what the dotted line is, so leading into that election. This could be that higher low, another significant higher low before the markets really do take off. And if it does follow something similar to this, well, you've got a few days of downside. Watch these dates here, 8th to roughly the 10th. That's where those bottoms have come in before. A little bit of a rise. And then watch those next dates down here, about 24th through to about the 29th or 30th of October, before you start to see a rise again in the market. That would then lead into November and December. The same sort of thing has happened here over the last 70 years. So this is using data over the last 70 years. October down and down again. There are movements to the upside and then that correction again. November, December, still looking like they could be pretty significant times, especially in election years. More data for November in election years. It has hosted the highest average range in S&P 500 sector returns. There are your orange line, so that's the election year. October in the election year, one of the lowest ones you can see here. And then November, basically the highest. And in the gray, no election year, it's basically average. So this could be that time where you get the election and then the market really does take off, especially as we saw a correction in August. We've seen corrections in September. So the market wasn't red, but we saw corrections in that month as well. That's typically what you do want to see. You want to see a lot of that excitement get flushed out of the market multiple times. Otherwise, it's basically going straight up and eventually got to get a correction. So the corrections are really healthy for that next move up. And should we get this other October correction, maybe back to these highs here at 56, then it seems like it's building up or building another cause for November to be another strong election year. So what is happening with this 12-year pattern, the US dollar and Bitcoin? Well, it seems like we're starting to see more strength in the US dollar, at least in the short term. And what I've seen over the last 7 months, slightly longer, is almost an exact inverse correlation to Bitcoin price. So if Bitcoin's going up, the US dollar is coming down. US dollar is going up, Bitcoin is coming down. Now, it's not always that way. And what we saw in the previous cycles were a lot of YouTubers and other sorts of analysts out there trying to find a holy grail to trading BTC. And so they just looked at it very granular, day to day. They expected that if on that day the US dollar went up, then Bitcoin had to go down. And if Bitcoin went up, then the US dollar had to go down. And I look at them in a longer time frame where you can start to see patterns play out in a larger time frame, right? And I think this one here sums it up the best. If we go back to February of this year, somewhere around the middle of February, this is where it really started to work in sync in an inverse manner. At other times, you were seeing Bitcoin going up and then the US dollar also going up for a short period of time. You saw Bitcoin going down and the US dollar going down. But when we got to roughly around here in February, you started to see the US dollar fall, which is what the colored bars are in the background. The white in the background here is the BTC price. And so from here, you can see Bitcoin skyrocket to that peak. And from that point, the US dollar dropped almost to the day. Now, I'm not trying to get these things to the exact day. I don't think that's the point of it. It's really just to see what some of these pressures could be on the market and why we could potentially see prices stagnate in terms of BTC for longer than many hope, which then brings on more fear. You see this start to drop, which then mounts a consolidation and the masses miss out again. They basically sit on the sidelines and wait until this gets nice and greedy and extreme greed, and they basically miss out on all of the moves. And so if we just take a closer look at what's going on here with the US dollar, you can see from roughly about July and the peaks in April, basically a nice little movement down there showed Bitcoin coming up, and then Bitcoin peaked out as it finally found its bottom. So there's the bottom coming right down, and there is Bitcoin going up into that peak there. Bitcoin coming down and then bouncing into that lower high. You've got the US dollar rising up, and then they came back into sync before going out of sync again right here, and then into this final little peak. Then together, everything got a little bit crazy in August. So this is where I think Bitcoin overshot the mark, going down to $49,000, because you can see the bounce back here was also in line with the US dollar going up. So if I zoom in right around here, the US dollar bounced for a few days as well. Basically, that August move was the yen carry trade fear. And so, of course, the US dollar was coming down at this point. And then you could start to see the US dollar drop, while Bitcoin also dropped for a few days, but then found its peak when the US dollar found its low. So on and so forth. You've got a similar-ish pattern here, US dollar down and Bitcoin up. Now we find ourselves at the present day, where we've just seen the US dollar break out of its downtrend. That's this white diagonal line right here. The last few days basically straight up. And this seems to have put pressure on Bitcoin, at least in the short term. The good news about that is it's still above the 50% level, still above swing lows, still above the 56K major 50% level here, going back to January 24. So it's basically the 2024 price range. So 56K is a very, very important level. As you can see, a lot of these lows had tested it, broken through here, but then closed back above it a few days later. And the most recent one here in September also tested it and closed back above it, putting in a higher low just on top of $56,000. So a very, very important level there. So going back to the DXY chart, I think we've got a little bit more upside here. As you can see, it's broken out. Now we come up to test around the 101.8 tops there. You can see 101.8. 102 is another psychological level. And then a few of these swing bottoms that came in around that 102.3. So quite a lot of resistance overhead, 101.8 to 102.3. Keep a lookout in case we get a rejection there, which then could bring on further upside for Bitcoin and cryptos, and really start to get that party going for assets, cryptos, Bitcoins, and then maybe even the stock market as well as we lead into the election. So you can start to see how a few of these things might be coming together for October, weakness, November, strength, and then big moves throughout Q4. So that was only 7 months, but the pattern goes back to the beginning of the cycle, the beginning of the real estate cycle, roughly around 2010 to 2012. This is where the US dollar found its base and then started to find strength for the first half of the real estate cycle. That culminated for the US dollar around 2022. We had the low for real estate and the stock markets around 2020. So that was the mid-cycle. And then from that point, you've seen the stock market take off. We've seen real estate take off from 2020. And of course, Bitcoin has also taken off from the COVID drop here in 2020. And again, it looks like we're about to move higher. So that is basically going back 12 years. But I could go back even further, but I won't in this video. Essentially, in a nutshell, we look at this over the 20-year cycles. Now, as I said, I won't go into it because it could take another whole video, and I've done that before, and videos go on quite some time. But essentially, all we're looking at is the US dollar finding weakness in the second half of the real estate cycle. It did that going back to the 80s into the recession of the early 90s. It did it again in the early 2000s when we saw the peak around 2000, 2002, and then the market crashed from there. The US dollar found its base and went higher again. And now we're into our third time that we can review this from the chart. I suspect we will go lower. And this each time over the last nearly 40 years has happened where the US dollar weakens, asset prices go crazy into the final peak. Now, it is possible that this doesn't happen this time. I don't like the chances of that. I'm obviously banking on the fact that I think the US dollar is going to continue showing weakness over the longer term, which is why I'm positioning myself in the markets in a way that I can take advantage of asset prices going up. Now, if you want further information about that, definitely check out the free crypto and economic report. There is a link in the top of the video description. We update you with real estate, Bitcoin, and sometimes a few little sneaky altcoins thrown in there as well. So if you want to get a free copy of that report to your email every single week for free, just use the link in the top of the video description, tiacrypto.com/subscribe. Okay, back to these longer term cycles. Now that was the US dollar, and things seem to be progressing along there slowly at this point, especially with that move to the upside. Nonetheless, it seems like if we are patient enough, there are more signs that it is going to break down over the longer term. The S&P 500 was another one of those major signals that I'd run through on the channel, and it gives us that warning signal a few weeks earlier, sometimes if we're lucky a few months earlier. Basically, the S&P 500 breaking into new, fresh all-time highs. And in the earlier stage, basically the first cycle for BTC, it broke into new fresh highs just underneath the GFC top. Remember, these were very, very dark days back in 2010, 2011, and 2012. If you weren't following the markets, it was basically believed that we were going to go into another GFC. There was all talks of GFC 2.0, 2.1, whatever you want to call it. We had the European banking crisis, Greece defaulting or nearly defaulting. They were going to leave the Eurozone. I remember this very vividly through this period here. All the while all of the headlines were going ballistic for fear, the market was rising and rising and rising, putting in higher lows, moving quite quickly. And by the time we got to the European banking crisis, Greece and all that stuff going on over there, Cyprus holding people's bank accounts hostage, taking money from people's banks, the S&P 500 was up 111% from that low. I suspect things are going to happen again at this time. Whether we get over the peak, we'll get the big correction and then the market will take off in the coming years. But nonetheless, we are breaking into new all-time highs, and this pattern seems to be playing out again. So I'll take it just a little bit granular here on the monthly chart. So things can change day to day. Maybe you see the market up 3% today, down 5% tomorrow. I'm not worried about that. I'm just looking at the longer term here and just pointing to months where the S&P has made new fresh highs over some previous tops, and then what Bitcoin has done to give us that leading indicator. The S&P is telling us something. It's likely, no guarantees, going to happen for BTC as well. Now, this red arrow and this little white arrow under here are the election months. So obviously 2012, there's an election there, and from November, bam, December, January, the market went basically crazy and then put in a new all-time high after the GFC top. And while the market was putting in a new all-time high here as well, it was the same thing as what's happening right now in 2024. People didn't believe that a new all-time high was justified because of the recession that we had just gone through in 2008 to 2009. They believed the market had to crash from that point. Now, when you look at it with your tape reading skills, you can see the breakout, the retest in June. Look at that test right on top of the previous all-time high, higher close, and then again, and then the market just kept going. 2014, 2015, had a bit of a scare here. 6-year bull run must end. That's when we started to hear all the headlines about this was the longest bull market in history. You might remember that back from 2017, 2018, and 2019. If you're in the market, that was all the headlines there. The rest is history from that point. So let me just show you this quickly again. You've got this here. There's the S&P breaking out to new highs around this red one and this white one here. And then BTC is basically getting ready to break out into some strong moves. So it came back and retested in the election. So there's November, it broke higher, new all-time high, and there goes Bitcoin in January 2013, just like the S&P 500. But you've got several months of warning here that the market is heating up, that it's putting in fresh high prices, it's retesting, it's getting ready to go, it's putting in higher lows. Bitcoin was doing the same, on the verge of breaking out. Mind you, Bitcoin had gone from $32 at the peak here down to $2 at the low. So a huge 90+% loss. And it was building again to go and stretch its legs into new fresh all-time highs up at around $200, and then again, finally peaking out at $1,200. So fast forward to the next election, 2016, the early warning sign started to reduce a little here. The S&P 500 got a new all-time high in July of 2016. Bitcoin started to correct here. Also, the S&P was. Then November rolls around and it pushes to another new all-time high. And basically the Bitcoin price followed suit and continued to power on from that point. But you can see that it was starting to get a little bit closer to that next decisive breakout point for the S&P 500. So we fast forward to 2020. Now it gets a little bit closer again. The S&P 500 breaking out, leading indicator, moving to new all-time highs. Bitcoin, come down here onto this monthly bar that you can see right here, and that was closing at new fresh highs. So that's the month there in August. That closed at a new fresh high for the cycle and its second highest monthly close in history. So early warning signs. The following month, it went down. So everyone was saying, well, it's over. This is it. We went from 11,000 or 12,500 down to what, 9,800. It's over. It's not happening. But it put in a higher low. October came around. It was red for the S&P 500, but it was massively green with almost a new all-time high closing price on the month. And then November came and basically it just went off to the races. We should all know what happened there. It was just non-stop, straight up to $65,000. So we come to today and we're seeing similar signs here. Let me just put this off. All-time high back in January. So very early warning signs here. January, new all-time high for the S&P 500. I posted about this all the time on X. New all-time highs, new all-time highs. A lot of people still don't want to believe it back then, even through here. Anyway, you've got the price for BTC in the white bar here. It was at 49K, corrected. And then there's your early warning sign. Bam. February comes along and we get a price of 64K. March happens and we get a new all-time high price for BTC. Is it over? I don't think so. Everything that I've shown you here leads me to believe that we still have more left in this move, especially with the S&P 500 doing very well, not breaking any monthly lows yet. It can. It's not going to be the end of the world if it does, but right now it's not breaking any monthly lows, and this might not break any monthly lows. Might even put a swing in the lows like it has done in some of these previous cycles. Look at these swings through here. There was one, then it just went on a massive rampage. 1, 2, 3, 4, 5. Then you get a correction. So basically there were no lower prices for 5 months straight. 5 months in a row, it had higher highs each of those months until you get to here, September, another little lower low here, and then it just took off for that point. That was your bull market right there. And the previous cycle, 2017, it was straight the fuck up. There was nothing, no chance for people to get into the S&P 500 if they were waiting for significant pullbacks. There is November. And then each of these months, the reason why this yellow line is straight up is because none of these months broke the previous low. So there was higher highs and higher lows in each of those months. Or there was higher lows in each of those months, not necessarily always a higher high because you can get some inside months, but basically higher lows continue to be put in. You got a lot of people waiting for these corrections and they just don't come. Early warning signs here, leading indicators, plenty more to get through in future videos. Hit the like and subscribe button, and I might not be in this room the next time I film a video. Moving house tomorrow and over the weekend. So say goodbye to the little white walls here. We'll get some white walls in the new place. And I'll see you back at the next video. Don't go anywhere. I think October is the fantastic time to keep following the market. Same deal for November as well. I hope you have a fantastic weekend and I'll see you at the next video, maybe from outdoors if I don't have the office set up in time. Otherwise, back into another office setting. Take care and peace out, guys.